Hey everyone, welcome back to the AI Tech channel. Today, we're diving headfirst into a story that's got Wall Street buzzing and the energy sector scrambling. DeepSeek, a Chinese AI company, just dropped a bombshell. Their new AI model claims to be significantly more energy efficient than anything we've seen before. Now, I know what you're thinking. Another AI breakthrough? Yawn. But trust me, this one is different. We're talking potential stock sell-offs, climate policy overhauls, and a complete reevaluation of how we power the AI revolution. The big question is this a genuine game changer, a massive investment opportunity, or are we looking at the beginning of an AI bubble bursting? Let's break it down. So, what exactly happened? DeepSeek unveiled a new AI model that they claim requires far less energy to run. Now, the AI industry is a hungry beast. Think about those massive data centers filled with servers chugging away, burning through electricity like there's no tomorrow. The expectation was that AI's energy demands would skyrocket, pushing power companies to build more plants and driving up energy consumption. But DeepSeek's claim throws a wrench in the works. If their model is truly as efficient as they say, it could dramatically reduce the projected energy footprint of AI. This isn't just a minor tweak. It's a potential paradigm shift. The news hit the market hard. We saw immediate stock drops for power companies like Vistra and Constellation Energy, companies heavily invested in powering these data centers. Investors are clearly nervous about the future of AI-driven energy demand. Let's talk about those immediate consequences. First, and most obviously, we're seeing reduced power demand forecasts for AI. Companies are rethinking their energy needs, and that means fewer data centers being built, or at least smaller ones. This directly impacts companies like Vistra and Constellation Energy, hence the stock sell-off. They were counting on this massive AI-driven energy boom, and now that boom looks a lot less certain. We're also seeing a reevaluation of data center deals. Companies are hitting the pause button, asking themselves if they really need to build that massive server farm they had planned. This affects the entire construction industry, from concrete suppliers to electricians. And finally, the narrative around AI's climate impact is shifting, at least temporarily. AI was being painted as a major villain in the climate change story, a huge energy hawk. Now, the picture is a bit more nuanced. But don't get too comfortable. We'll get to the risks later. But the story doesn't stop there. The ripples of DeepSeek's announcement are spreading throughout the tech world. Think about chip manufacturers like NVIDIA. They were also caught in the stock market downturn. While it's likely a temporary blip, it does raise questions about future revenue projections. If AI models become more efficient, will companies need as many high-powered chips? Investors in the power sector are also reevaluating their strategies. They can't just blindly chase AI demand anymore. They need to diversify, maybe focusing on the electrification of homes and factories, or investing in other growing sectors. Even nuclear energy projects are being questioned. Microsoft and Meta made huge investments in nuclear power to fuel their AI ambitions. Will they scale back those investments if AI energy demands are lower? And what about renewable energy? While overall electricity demand is still expected to grow, the type of energy needed might change, affecting the prioritization of different renewable energy projects. This is a complex web of interconnected industries, and DeepSeek has just pulled a thread that's unraveling the whole thing. Here's a particularly interesting twist. Remember President Trump's plan to fast-track fossil fuel power plants near data centers? Well, that plan just became a lot less relevant. The rationale behind it was to meet the projected surge in AI energy demand. If that demand isn't as high as we thought, then those new fossil fuel plants become unnecessary and potentially a huge waste of resources. This could be a major blow to the fossil fuel industry and a potential win for climate activists. But, and this is a big but, we need to consider the Jevons paradox. The Jevons paradox, also known as the rebound effect, is a tricky concept. It basically states that increased efficiency can paradoxically lead to increased overall consumption. Think about it. If DeepSeek's model makes AI cheaper and easier to use, it could spur even more AI development and deployment. We might see an explosion of AI applications in every aspect of our lives, ultimately negating the energy savings from the more efficient model. This is a serious concern, and it highlights the need for smart policies to ensure that energy efficiency gains actually translate into real reductions in energy consumption and emissions. We can't just assume that efficiency alone will solve the problem. Let's zoom out and look at the broader socio-economic consequences. If AI becomes less energy-intensive, it could lower the operational costs, making AI technologies more accessible to smaller businesses and individuals. This could democratize AI, leveling the playing field and fostering innovation. Governments worldwide may need to revise their climate policies and regulations based on the new understanding of AI's energy footprint. This could affect carbon emission targets, incentives for renewable energy, and regulations on data center construction. We could also see shifts in the job market. There might be a reduced need for workers in traditional power plants and increased demand for specialists in energy-efficient AI technologies. This requires us to invest in retraining and education programs to prepare the workforce for the future. And here's where things get really interesting. China's DeepSeek is at the forefront of this AI efficiency breakthrough. This could potentially shift the global balance of power in AI development. The US has been the undisputed leader in AI for years, but China is rapidly catching up. DeepSeek's innovation could give them a significant advantage, particularly in areas like energy-efficient AI hardware and software. This has major geopolitical implications, and it's something that policymakers in the US need to take very seriously. The race for AI dominance is heating up, and energy efficiency could be the key to winning. Now, let's talk about the risks. There are plenty of them. First and foremost, we need to verify DeepSeek's claims. Is their model truly as efficient as they say? We need independent testing and validation to ensure that these claims are not just hype. There's also the risk of market volatility. The stock market's reaction to the DeepSeek announcement shows how sensitive investors are to changes in the AI landscape. We could see further fluctuations as the situation unfolds. And then there's the risk of stranded assets. Investments in power infrastructure based on inflated AI energy demand projections could become worthless if AI energy consumption doesn't materialize as expected. Finally, we need to be mindful of the ethical considerations I mentioned before: data privacy, bias, job displacement, and the unequal distribution of AI benefits. These are all critical issues that need to be addressed as AI continues to evolve. There's one more thing I want to touch on, and it's a bit concerning. The information I was gathering for this video included a snippet about NewYorkTimes.com blocking me due to security concerns, including potential SQL command attacks. This highlights the vulnerability of websites to cyber attacks, especially in the age of AI. Data security and privacy are paramount, and we need to be vigilant about protecting ourselves and our information online. This is a reminder that the digital world is not always a safe place, and we need to take precautions to protect ourselves from online threats. So, what's the verdict? Is DeepSeek's breakthrough a genuine investment opportunity, or are we looking at the beginning of an AI bubble bursting? The answer, as always, is complicated. There's no doubt that DeepSeek's technology has the potential to disrupt the energy market and reshape the future of AI development. The immediate impact is on power demand forecasts and stock prices, but the long-term consequences could affect climate policy, investment strategies, and the global balance of power in the tech industry. As investors, we need to be cautious, do our research, and avoid getting caught up in the hype. We need to verify the claims, assess the risks, and consider the ethical implications. The AI revolution is still in its early stages, and there's a lot of uncertainty ahead. But one thing is clear: DeepSeek's announcement has changed the game, and we need to pay attention. Now, I want to hear from you. What do you think about DeepSeek's breakthrough? Is this a game changer or just another overhyped AI moment? Let me know in the comments below. And don't forget to like and subscribe for more AI tech news and analysis. Thanks for watching, and I'll see you in the next video.